If cash is king, credit's got to be the queen. Welcome back to Keys and Contracts. Today we are going to discuss, you know what, before we get into it, comment down below a slogan. If you have an idea for a slogan for Keys and Contracts, please put it in the comments. I was thinking of something like Keys and Contracts, all things real estate, where you can get the keys to your new home, get under contract, where you can get under contract, where I teach you, I don't know. If you have an idea, put it down below. I'm not like a slogan-y kind of person. So if you can help me out, put a comment down below of what you think the slogan should be for Keys and Contracts. I think in the very first episode, I did say something kind of catchy or to kind of introduce the series, but I don't know about it. But anyway, so today we're going to be talking about credit. So like I say and have been saying on Keys and Contracts even already, saving money is my thing. I love to save my clients money. I love to make my sellers money. I just love learning about financials and being more financially literate. One of the best ways that you can save money is by working on your credit and having a good credit score. The better your credit score is, the more money it's going to save you in the long run. I used to work in a car dealership. I don't even know what year that was. A long time ago. While I was in college, I was working at a car dealership. I was working in the finance department. I was not a salesperson. So I got to see the difference between having good credit and I think that was the first time I realized, like, yeah, credit is a big deal. How easy the transaction was for someone that had good credit. It was a totally different experience for someone who had bad credit. I mean, they had to come with files. They needed so much proof. I mean, it was so much more documentation when you didn't have good credit. It's crazy. It was really crazy. However, I have never tried to buy a car with bad credit, but I myself certainly had bad credit. So we want to talk about my personal experience having bad credit, and I'm not really going to go into how I fixed it because I don't want someone to learn how I fixed my personal credit and try to apply it to themselves and it doesn't work, because everyone's credit profile is totally different. And then we're going to also talk about what credit score you should have to buy a house. What is ideal? What is that sweet spot for you to be able to buy a house? We're going to talk about that as well. This is a podcast format. So we're going to talk about my personal history and experience with my credit. So pretty much right out the gate, I had bad credit. I didn't even get a chance to have good credit. Right out the gate, I had bad credit. So I still have student loan debt, but when I first started and first graduated from college, you get into that forbearance and all that kind of stuff, but they wanted me to pay $1,000 a month, and that just was not going to work. $1,000 a month for, at least for me, I don't know who's coming out of college balling, but I myself was not. And I'm just like, I don't care what they do. I don't care what they do to my credit. I cannot pay $1,000 a month for student loans, just for student loans. I just cannot do it. I mean, I was going back and forth with Navient. It was just a long, drawn out situation that really didn't have to be. Afterwards, I learned, and they put me into a program which they had never offered me to do before, like an income-based repayment program. They never offered it to do it before. And I'm like, I don't care luckily I hadn't had to use my credit during that time, but I'm like, I don't care what my credit is. I'm just not paying it. I'm just not paying it. I mean, even if I had the money at the time, I still probably would not have paid it, because I just think for some things, it's just the principle. I was so upset. Now, is that the right thing to do? No. Would I advise somebody to just not pay their bills because of a principle? I would not. But at the time, I was so frustrated with just being out of college. So yeah, I started out for quite a few years after college just having bad credit. It did eventually on its own just kind of get better once I started paying my student loans. But because I had nothing else on my credit, I mean, besides that student loan, that it was just really affecting my credit terribly because I had nothing else on it. That was the only thing really on my credit profile. Eventually it did get a little bit better, but it wasn't really until I started real estate that I decided, okay, it's time to work on your credit and get your credit a little better, because I was helping people buy homes and get into rentals. And once I explained to them the minimum credit score and some of those people were not eligible, and my credit at the time was worse than theirs, I'm like, wow, I'm gonna have to work on my credit. Now, did I pass judgment on those people? No, not at all. But just being a realtor and seeing firsthand the importance of credit as far as trying to get a place or trying to get a house, even if you're just trying to rent, I was like, I need to get my own credit together. So I started learning more and more and more about credit. I learned so much that my credit is, I think I probably was in good standing by my first year in real estate. I had good credit. Now I have great. Definitely was not an overnight thing that I went from terrible, the worst of the worst credit, to having great credit. For credit, to me, mostly you can do the right thing, but you have to do the right thing for an extended period of time. It's not going to just be like overnight. Yeah, you will get those moments where your credit score will jump, depending on what you do and depending on what your credit profile looks like. But for the most part, you just have to consistently make payments on time and open up and close the right accounts. If you need credit help, the page/person that I go to the most. I have actually purchased some of her courses, but she gets a lot of information just on social media and on YouTube. Her name is Shonda Martin, and she is a credit expert. She's got the license, the certifications. She's got it all, and she gives a lot of good information for free. So check her out if you want to try and dabble in fixing your credit yourself. She has a lot of free information. And that's how I was able to fix my credit, by learning from her. And she does not know me from a can of paint. And I get nothing from sending you her information. Just someone that I know that, like I said, will save you money than trying to pay a credit, fixer to, fix your credit. There's a lot of things you can do easily on your own, and you'll see the exact same results. Okay, so we know that in home buying, you definitely want to make sure your credit is as high as possible. In all areas, when you're trying to purchase something, there'll be different ranges, but for the most part, the higher your credit is, the more money you're going to save. You're going to save putting money down, and you're going to save on your interest rate. Whether you're buying a car, a house, you're financing anything, it's going to save you money for the most part. Now, I do know that in certain circumstances, you just can't avoid it. If you can't pay your bills, if you're tight, you're check to check, something's got to give, and it eventually is going to probably affect your credit. But it's really important to know what to do and to learn for yourself how to come back once you're stable and back on your feet, how to get your credit back in good standing. Unless you've got so much cash that it just doesn't matter, even then, just have your credit together, because I think at one point during my bad credit phase, and I from renting a car, so I was really embarrassed at that point. And I think my credit had gone from terrible to not so terrible to just like bad, and I could not rent a car. So my husband had to put it in his name and rent the car for me. It was ridiculous. I think it was like an Enterprise or something like that. But anyway, so when you're trying to buy a house, I digress. But when you're trying to buy a house, where should your credit be? So your credit could really be anywhere between, I would say, 580 to 680 minimum to purchase a house. It all depends on the loan that you're going to use. If you're going to use down payment assistance, it depends on a lot of different factors. For a USDA loan, there's no strict minimum for that loan, but I would say minimum you should have about a 640. The same for a VA loan. If you're getting a VA loan, there's no strict minimum for that. There's not like FHA, you have to have a 580. There's no strict minimum, but I would still say you should be about a 620, 640 to qualify for a VA loan. Now, things vary. There's also the option for manual underwriting that you can even go lower for VA and USDA. But just to be safe and to save as much money as you can, around 640 is that sweet spot. But of course, you can work with a 640. You can do a lot of things with 640, 580, 590. You can work with those credit scores. So just because you're a first-time home buyer doesn't mean that they're gonna give you money or give you the opportunity for a loan and then also allow you to have bad credit. So the moral of this video is to make sure that you are working on your credit. If you are capable and you're not working on your credit, you are doing yourself a huge disservice, and you're going to cost yourself more money in the long run and in the short run. It's going to be more money, okay? And I know just as well as anybody else that credit can be really daunting. It seems like it's just a game or something to try and make it harder for you to succeed. And I definitely understand that. But if you're trying to do anything in America, in the United States of America, it's best for you to just play the game, learn the game, and succeed. So that's my credit story. And just the tips on where you ideally want your credit to be when you're trying to buy a house. It's really, really important, y'all. Especially if you're a youngin', if you're young and you're just getting started, work on your credit, put your credit first. I do have a video talking about credit cards. You should not be afraid of credit cards. I know people say you don't want to owe anybody nothing. You don't want to have any debt and all that. But in this country, you have to have some type of debt. You have to prove that you are credit worthy to get the interest rates and some of the things that you want. So it's all a game, y'all. And I know it's a game. And let's go back to the principle of things. If someone has bad credit, why would you now charge them more for what they're trying to buy? More than likely, they may be in some kind of hardship, or maybe they're just not financially literate. So unfortunately, as much as it doesn't make sense to, lose out on more money when the person with good credit could be, at least that's how they're looking at, could be a little more financially stable. But anyway, that's just the game. And that is all I have to say for now. That concludes this episode of Keys and Contracts. I hope you learned something. And I hope that you really take your credit serious if you have not already been taking it serious. And I will see you in the next episode. Come back next Thursday. Every single Thursday, I will be dropping a Keys and Contracts episode. If you have any questions or comments, please leave them down below. And I may actually do a full video on it, depending on the question. I also post blogs and property tours as well. So make sure you're watching the channel and have your notification bell on so you don't miss all my other videos as well. But yeah, I will see you guys in the next video. Bye.